Hey, what's up you guys? Lukas here from excelwealth.com, and great that you joined in today. And in today's video, if you've been wondering and if you've been thinking about buying into bonds as an investment, not Mr. Bond, not 007, okay? We're not talking about James Bond. We're talking about bonds as an investment. If you've been thinking about that, well, you should absolutely watch this video because I'm going to shoot down this idea for you. No matter what age you are, nobody should be investing in bonds. Now, I'm not talking about the James Bond here. I'm sorry, we get that. It's not about James Bond. But is it the bonds, as an asset class? We know the stock market. But when we take a look at bonds, now before we actually know, what are bonds? Well, we've got government bonds and we've got corporate bonds. And bonds are actually just a piece of paper that says, I owe you an X amount of money. And that's actually it. So, just because you gave me some money, I owe you something. This is a paper. You know what? You take my bond certificate that says I owe you $100,000. That's it. That's the only thing what bonds actually does. So, the payback return is just 100%, like actually 99%. Whereas stocks, they just say, you know what? You buy a share of my company. That's the only thing what you buy with stocks. And if the market values the stock a certain price, that's how it fluctuates. But in bonds, I just say, you know what? I need a loan of $100,000 because I'm buying a certain machinery. That's the only thing with bonds. Now, a government could say that because they could say, you know what? We're doing an infrastructure project and we need $10 million. Well, then you can start investing in that government bond because they need $10 million. And at the end of the time, at the end of the period, could be 5 years, could be 10 years, could be 30 years, they pay you back the initial payment with a fixed amount of interest rate. That's it. It's just safe. It's a safe investment, but it doesn't do much. If you invest $100,000 with an interest rate of maybe 2% per year or maybe 2.5, that's it. Doesn't do much. Doesn't do much, and even after 10 years, it is still the same amount. Doesn't change. The only thing is, the price of one bond stock, maybe, that fell slightly and then you bought it slightly cheaper, but it's not as volatile as the stock market. Now, the interesting thing with bonds is that in 2021, about $130 trillion is invested in bonds. Now, you might be thinking, oh my goodness, that's a lot of money. Well, if you compare it to the stock market, currently in 2021, about $50 trillion is invested in stocks. So yes, it's almost 2.5 times as little compared to bonds. Now you might be thinking, ooh, maybe bonds is a better idea because there's more money invested in bonds. But you have to see it like this. Stocks is private money. Bonds, on the other end, is government money. Now, why is that a difference? Why is that such an important difference? Private companies can go bankrupt. Private companies can go bust. But private companies can also rise like a star, like the Amazon, not the Amazon, but the Amazon company, and Tesla, and Google. They can actually rise like that. That makes a huge difference. They can actually grow immensely in value. Stocks, private money. Governments cannot go bankrupt. Well, that's not completely true. They can go bankrupt, but the chance of a government to go bankrupt is rather low. This is why the moment a corporate bond, so a company saying you know what, I'm going to buy a machinery, the chance that they go bankrupt is low because the moment they do go bankrupt, you as a bond share owner will get paid up first. Because, hey, you helped them buying a certain investment and they went bankrupt, so we need to pay you back first. Whereas stock owners, you're last. You're last in line. You're last in line, so you're not going to be paid up front. They're going to pay the people who they really own money first, bond owners. So if you really think about it, $130 trillion compared to the $50 trillion, Yes, it is more, but it's very obvious because governments can say, you know what, we need money, we need money for about 30 years time. Stocks, you don't basically fundamentally buy stocks to hold for 30 years. At least not the same piece of paper. Bonds are valued at the same time over 30 years time. So it doesn't really do anything. So that's another reason why not to invest in bonds. They don't do anything. It's a lot of money, but it's all government money. Doesn't change over time. And it's super safe, but there's hardly any return. So my reason for not buying any bonds, I'm talking about the James Bond because that guy's cool. Yes, he is. But the thing is, bonds don't really do anything. So no matter what age you are, I wouldn't be buying into bonds because I'm sorry, it doesn't really do anything. And I know that people out there who disagree with me who say, Lucas, you should be spreading your risk. You should invest some in bonds, you should invest some in stocks, and you should invest some in real estate. I get that, but bonds really don't do anything. Thank you very much for watching today's video. If you liked the video, be sure to hit that like button because it will really influence YouTube's algorithm and telling YouTube like, these videos that Lucas is shooting for you guys is actually quite interesting. You gotta watch some more. I will have myself popping up over here. At least I will tell my video editor to do that. To pop it up and tell you, hit that subscribe button, hit that like button, and don't forget to hit that notification bell as well. I thank you very much. I'll see you on the next Happy Investing. Bye-bye.